Hey, good morning, everyone. Hope everyone is having a good weekend. So, why it is a high time to for everyone to start looking for a plan B? Right? Most of you already aware like how AI is taking away a lot of IT jobs, or not just IT jobs, even HR jobs or non-IT jobs. Whatever right humans were doing, AI can replace around 80-85% of such type of jobs. So within last 1 2 weeks, we saw huge layoffs from UPS, Amazon, Intel, Nestle, Accenture, Ford, Microsoft, and this list is growing. Right, it is not just a. So we may see a lot more, which I was warning you since last 1 year, and it is in action now. So it is very important for every family, especially I know mostly from Indian community or Asian community. Most of us are mostly into IT jobs. So it is better to have a plan B so that in case of any such news, you don't need to have a surprise. So again, one reason why we generally lose in trading is due to not having a proper system. Right? When you have a system means you have to follow certain rules. Right? Well, it is just like we have to follow. If this happens, then we have to do this. If this happens, we have to do this like that. Then we will be successful. Without a proper plan, without a trade plan, without a simple rule-based strategy, we'll have issues. So we'll have a lot of law. We may win one day, we may lose other days. So it is very important to have a simple rule-based system, a rule-based approach, so that you follow the rules. Then 80-85% of the time we can again there are always that black swan events. Right, we saw that AWS outage, or suddenly Trump will tweet something on some tariffs. So we will always have such type of black swan events. But other than those black swan events, if we can follow a simple rule-based approach, we'll be very much successful. So for trading, there are different types of trading. Right, you can do trading on prop firms or futures trading. Right, you can prop firms is where you don't use your own money. You use the money or given by the prop firms, and you can take the trades. So your risk is minimal because you are not investing your hard-earned money. That is one approach. Or the second approach is where you just take trades. If you don't have a lot of time, you can just use trades like earnings related trades, where you do one day before or few weeks before the earnings, you take the trades. That is one way to have a rule based approach. So one is prop firm trading, second one is earnings related trading, or you can use something called as SPX income trading. Right, SPX income trading is where you basically just to use one ticker. You don't need to look at, there are thousands of stocks or thousand many ETFs, hundreds of ETFs. You don't need to follow each and everything. You just focus on one ticker every day, and then you can you have certain rules for SPX trading. That is one more type of trading. Then there is one more, right? If you are more of a full-time trader, you want to take advantage of the volatility with different stocks. There will be always some news associated to some stocks every day. You want to take advantage of those. Then you can also do stocks and options trading. So today, right, in next 1 hour, I'll explain you rule-based approach for all these types of trading. So based on your profile, whichever you feel is right, because there are some trades where you it needs more focus, more faster actions. There are some rule-based approach where you just take a trade today, you close trade tomorrow. You just need 5 minutes today, 5 minutes tomorrow. So like that, you have to see which one fits your style, your your schedule, work schedules, or your profile, your risk profile, your portfolio, all those things. And you have to decide, okay, out of these four different types of systems, which system fits your your style, and then you have to just follow that, right? If you try to do too many things also, sometimes it can be risky. You identify which one is best for you, and then you just follow that. So initially I'll start with stocks and options trading, right? So if you want to do stocks and options trading, what are the rules to follow, or what is the best way to do? I'll start with that. Then I'll take you to SPX trading. Then I'll take you to prop firm trading, so that I'll explain, and then I'll explain you the earnings trading. Once I do each strategy, I'll open up for Q&A. If anyone has questions, you can post in the chat window. We'll start with the stocks and options trading. So for stocks and options trading, so I hope everyone can see the chart here. So we have some indicators like QQQ indicator, right? RCQQQ indicator. So if you see this particular indicator, so why it is called as QQQ? That means QQQ or Nasdaq has nearly 100 tech stocks, right? Like Adobe or Google, Amazon, Microsoft, Apple. So all these stocks. So you have some list of 25, 30 stocks. There are thousands of stocks, but these are some of the top 25 Nasdaq stocks. And when you add this indicator to your chart, generally you use 15-minute time frame for this strategy, right? This strategy is the best strategy to do debit spreads or credit spreads, and where you can take a trade and you can let it expire for the rest of the week. So for example, there are some 20, 25 different tickers which which are part of Nasdaq, which are part of Nasdaq top 100 stocks. So when you enable this in 15-minute time frame, it immediately gives you a table. It gives you a table showing like which tickers are bullish, which tickers are bearish. So generally, you have to remember three terms. One is called as a discount zone. Discount means we by the name itself, you know that it is at a cheaper price compared to the fair value price. This is at the equilibrium or the fair value price, right? That means if, right, let us say you generally make 100K per annum. If the job market is bad, you will be ready to pay work for 80K or 90K. If there is lot of demand for the technology you are doing, right? Let us say you are in Workday, you are in CRM, or right, you are in Salesforce, you are in SAP. Then you have lot of demand. Then you may demand for 120, 130K, even though the fair value is 100K. So like that, if the stock is approximately around $100, that is like a fair value. But if the stock is trading at $90, that is like a discount price. If the stock is trading at around $110, that is like a premium price. That means you are paying more than the fair value. So generally, the prices generally move between these three zones: discount zone, equilibrium zone, and the premium zone. So whenever you enable the stock with some different tickers in the list, now it is telling that Apple is overall the trend is bullish. Overall, it is in a level 3 and it is at a discount zone. So if you see anything in green color, that means they are good opportunities. So for example, if I go to Apple now, what do you think can happen on Monday for Apple stock? Right? It reported good earnings. It went all the way up, touched the premium zone. Right? Premium zone is where big companies will take the profits. They'll they will buy at the discount zone. They will take it all the way to the premium zone, and then they will bring it back. Whereas retail traders, we trade with FOMO without a proper rule-based approach. We buy at the tops, whereas big companies will buy at the bottom. So, so if you see here, what do you think can happen on Monday morning? right? So the table is already telling you that Apple is a bullish stock. The trend is overall bullish, right? Ignore about what is level one, level two for now, but it is telling that it is a discount zone, right? It went all the way to $278. Now it came all the way to $270, right? Friday morning around or Thursday after the earnings, it went all the way to, or even if we look at ETH, extended trading hours, right? That morning also, when market opened also, it went nearly all the way to 270 to $80. So now it is at a discount zone. So do you think Apple has more potential to go up or go down on Monday morning? You can post your comments in the chat window. So there can be two or three possibilities. One is generally for stocks or any instrument, there are mainly three possibilities which can happen. One is it will go up. Second is it can stay choppy. Choppy means just it will go up, come down, go up, come down, go up, come down. Third one is it will drop. So if you in this figure, in this image, in the chart, you can also see something called as order blocks, right? This is where a lot of big companies want to buy. This is where big companies want to buy. This is right. If you see in the orange color box, that is where big companies want to sell. So there is a high possibility either stock will go up or stock will stay choppy. But if you go below this price, right around 267, if you do a bull put below 267, there is a high possibility that overall on Friday, by Friday, Apple will stay somewhere in between these zones, right? Between 260 and 280. So if you are doing a credit spread or if you are doing a bull put, that means you are telling that you are selling a 270 call, you are buying a 265 call, you are collecting some 200, $300 premium for every contract. So if stock stays above 270, all that money is yours. If stock stays choppy, all the money is yours. Stock stays little bit down, still you will make 70, 80% of the money, right? If you see the trend here, in 15 minutes it is bullish, 1 hour it is bullish, 4 hours it is bullish, daily it is bullish, all higher time frames it is bullish, right? Because it went all the way to the top, big companies brought it down, but again, big companies are trying to buy it. So there is very, very high possibility for Apple to go up on Monday again. Same thing if you go to AEP. So if you do bull put spreads here, the chances are very high, right? You can, if you are a stocks buyer, you can buy Apple stock, right? If you want, you can buy here or you wait little bit down. And when price comes little bit down, right? If you go here and, for example, if you enable what is the premium price, what is the discount price, it will also tell you that. So it is telling Apple the discount price is 271, right? Around $269 to 271 is a good price to buy. The premium price is 276, 275. That means if the stock is trading between 269 to 271, you can buy it if you are a stocks buyer. And you can take profit somewhere here, 275, 276. Or you can do bull puts below this price, right? Below 269, that means 270 to 271 is the discount zone. So you go below 270, you sell 270, you buy 265. You will collect 200, 250 on Monday morning. So there is very 90% possibility for Apple to go up to, you don't even need to wait until Friday expiry. Monday it goes little bit up, you will make 30%, 40%. You can take the profits, you can close the trade, right? So in the same way, right? The other one is AEP. So whatever is in the green color, that means they are the best ones to either buy the stock or you can also do the bull puts or you can also do naked calls. If you are a high risk trader, if you can also buy a call, right? Apple 270 call, Apple 275 call. Suddenly it starts going up, you will make nice profits. If you do bull puts, even if it stays choppy, also you'll make profit. If you buy a call, only if it goes quickly up, you will make profits. Then the next strategy is where, yeah, you see whatever is the next one in the green color, AEP is in the green color. So AEP bullish, $120 is a good price. Now it is around $120, right? If you see the current price, you have a buy order block here. So now if you go below this, do bull puts. So if you see the trend, bullish, 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 bullish. RSI is good. MACD is good. So there is a high possibility you have buy order block here. So there is very high possibility for AEP to go all the way to 123. So you can do bull puts somewhere below this price, and by next Friday or Monday, if it goes up, you will make 20-30% profit on your credit spreads. Or by Friday, if it stays above 120, whatever money you collected, 100% is yours. Like that, anything in green color, you can either buy a stock or you can do the bull puts. If it is orange or blue, you can just ignore them, right? In the same way, let us go to QQQ1, right? Because, right, trading view will not allow too many tickers. So you can add another 30-40 tickers here. So again, in this list, I have all the tickers starting from C, D, E like that. So the first one, QQQ, has all A and B. Here you have C, D, E like that. So now if you see, we don't have anything in green color. But if you have something in red color, right, FTNT, it is at bearish and it is at a premium zone. If something is a bearish ticker and if it is at a premium zone, let us go to FTNT. So this particular stock is overall in a bearish trend, right? If you see the trend, it is creating, right, lower lows. So it went all the way to 87. Now it created a higher lows and lower lows. So what do you think can happen to this? Right here you have sell blocks. Right here you have buy block. Here you have all the big sellers are trying to sell off the stock. The price is somewhere at the premium zone. So what do you think can happen to this stock on Monday? Right, FTNT. There is a high possibility for a stock to drop because overall trend is bearish and it is at a premium zone. Right, it came down, then there was some pullback. Now again, big companies are trying to sell it off. So there is a high possibility for stock to drop. So either you can buy the puts, you can short the stock, or you do bear calls. Right? You sell 87 call, you buy 90 call, collect the premiums. If the price stays below 87 by next Friday, all that money collected is 100% yours. If it stays choppy, you will make profit. If it drops, you will make profit. Or if it goes little bit up until 87, 88, still you will make profits. So you have high chance of making profits with a low risk. So if something is in orange or blue, you can ignore them. Only we are looking for either green color or red color. Green colors are the bullish stocks, red color are the bearish stocks. The other ones we can ignore. Right? In the same way, let us go to QQQ. So that because we have nearly 100 stocks in the QQQ, right? In the NASDAQ top 100. So if you see QQQ, you have to tell me which one do you think is a good one to, right? From this one, which one do you think is the best opportunity? Right? Because you cannot go to each stock and see which is looking which is at discount, which is at premium. So out of this, right, there are nearly 30, 40 stocks in this list. Right? You have everything from I, J, K, L, M, N, all the stocks are here until P. So out of this list, which one do you has a more probability to make profits? And what do you want to do? out of all these tickers. So out of the 30, 40 tickets, it is only showing which are at discount, which are at premium. And out of those, right, out of those 30, 40, you got a 10 list. Out of this 10 also, the best one is NVIDIA. NVIDIA bull puts, right? If you see NVIDIA, right, it went all the way to nearly $210. And then there is a pullback. So overall, if you see the trend, 15 minutes bullish, 1 hour bullish, 4 hours bullish, daily is bullish. So we know that one fundamental rule in trading is always when it is a bullish ticker, buy on the drop, buy on the dip. When it is a bearish ticker, sell on the rise. So it is a bullish ticker, right? If you go to daily time frame, right? I told you many times, right? It will go 3, 4 days up, 1, 2 days pullback, 3, 4 days up, 1, 2 days pullback, 2, 3 days up, some pullback, 3, 4 days up, some pullback. So now you got a pullback. So there is a very, very high potential, high possibility for Nvidia to go up. So we can take the bull puts somewhere. You see, like where is the least price? 202. If you do 202 bull puts, right? You sell 202, buy 200 or 199 puts. If Nvidia stays above 202 by next Friday, all that money is yours. Let's say all you are doing is 5 minutes, right? You don't need to keep looking at the charts. All you are doing is whenever you have some time in the morning or afternoon, whenever you have some time, you just open the scanners, see that okay, out of this many tickers, I see that FTNT is a bearish ticker. Open a bear call spread. Right, out of all these things, okay, I don't see any green. I see only one red, FTNT. So I'll open a bear call spread on FTNT. Out of all these tickers, I don't see except NVIDIA, everything is blue or orange. You can ignore them. If something is green, that means that is a good stock, either to buy stock or you can do the bull puts. The same way, right? We know that now all the this year is all about quantum stocks, and so if you want to know which quantum stocks are looking good, so if you see here, NVDL is bullish, CAN is bearish, right? Remaining IONQ is bullish, but it is not in green color. So it is bullish, but it is already at a premium zone. So we don't want to take that. So NVDL, you can do CAN, you can do bear calls. NVDL, you can do bull puts. And you can write it. If you want, you can keep changing the whichever tickers you want. You can go here. You don't want to take MSTR. You can go change it to something whatever you want. You want SPX or SPY, or you want to do some other ticker which you like, you can change whatever tickers you want. So here you are not spending entire day watching the charts. All you are doing is you open this, check the scanner, and see that okay, it is a bullish ticker, NVDL. Okay, overall trend is bullish. It is at bullish. It is a discount zone. So there is a high possibility it will come touch this support and go all the way up. So again, you have a lot of sellers here. So big companies will try to bring it down, take it all the way up. So if price stays above this, above 107, all the money collected is yours. So like that, you have the QQQ scanner, or you have the same way, just like QQQ, you have SPY stocks. Again, you can just use, right? You don't need to have everything because you can change whichever tickers you want. So here you will have all the SPY, S&P top 100 stocks, right? Because Nasdaq is all about technology stocks, whereas here you have MMM, ABT, or you have some stocks which are not related to technology like AIG, AMG, and or AT&T, right? Bank of America, JP Morgan. S&P will have everything, all domains. Nasdaq will have only technology domain. So here now, if you see, okay, Apple, AEP, they are the best ones. Or it takes less than 1 minute for you to determine which tickers are good. Then just go below the support level, take the bull puts if it is a bullish ticker. So here you don't have anything good. So you can just ignore it. So here TMO is a bearish ticker, right? There is nothing which is in green, but only TMO is bearish. So now let us go to TMO chart. Enter TMO and you see that, right? It is creating, right, higher highs and then lower highs. It is dropping, right? It is creating another lower high. So now it is at a big sell block. It is at a premium zone. So if you do bear call spreads, you do 570, 580 bear call and collect premiums. There is a high possibility you will see a drop all the way to 556 in next week, Monday, Tuesday. Right? All you are doing is okay, open the scanner, see which is bullish or which is bearish. If it is a bearish, you also see that oh, it is at a premium zone. It is also at a sell block. Okay, go to the resistance, do a bear call above this. If it is a bullish ticker, go to the support, do a bull put spread. That's it. You don't need to sit before the system throughout the day. Even though you are a right full-time trader or whatever it is, you don't need to worry much. Your risk is minimal because you are seeing multiple time frames and you are seeing that it is overall it's a bearish ticker. It is a premium zone, right? Always our rule is if it is a bearish ticker, sell at the top, sell at the rise. If it is a bullish ticker, buy at the bottom. So you can short the stock, you can do bear calls, you can buy the put, you can do whatever you want, right? Four different ways to make money with this one. The same way, right? Even for if you want to do futures trading, whether it is in prop firms or whether it is in personal account, you can use the same strategy, right? Platinum is at bullish. So it is overall a bullish ticker. It came to a discount zone. Now it is at a buy block. So there is very high possibility for price to go up tomorrow or Sunday evening. We will see a price going up on platinum or ZB1 is bearish. So you can go to ZB1, sorry, ZB. So you can do options on futures or you can just do futures. So ZB is overall bearish ticker. It went to a there is a sell block. Now it is at a premium zone. So you can wait for price to go a little bit close to the resistance. There is the resistance. Whenever price goes touch this, immediately you'll see a big drop. You can do it in prop accounts, you can do it in personal accounts, whatever you want to do, you can do with the futures. So this is one way where you are not spending a lot of time. You whenever it goes here, you just take a option, right? You can do bear calls on options, or you can do short on ZB or UB. Then it will come all the way to the bottom again, right? It will come to the support because it is a bearish ticker and it did a rise. So it is 5 minutes, 15 minutes, 1 hour, everything it is bearish. So we'll see a nice drop on ZB today evening, tomorrow morning. You will see a nice drop on ZB. So this is your first strategy where you can trade stocks, options, futures with any of these indicators like QQQ, SPY indicator. So when you get access to QQQ, you will get access to all these indicators. QQQ1, QQQ2, QQQ3. So you don't need to buy three indicators. If you buy QQQ indicator, you get access to all the QQQ. So you will get all these four scanners. Then you spend 5 minutes in the morning. You see like, oh, which ticker is looking bullish or bearish, and then you can do bull puts or bear calls on that. Remaining tickers you can just ignore. So as I mentioned, tomorrow you can see that FTNT will see a nice drop. If you see QQQ2, Nvidia will make a nice move up. NVDL will make a nice move up. CAN will drop big. So only green and red. Ignore the blue and orange. Right? Only you focus on the green color or red color. If green, you can buy the stock. You can do bull puts. If you are a low risk trader, you can buy calls. If you are a high risk trader, if it is red, you can short the stock. You can do bear call spread. You can buy puts like that. So if you buy the SPY indicator, then you will get all the SPY 1, SPY 2, SPY 3, all these things. So this is the first strategy. So anyone has any questions on this strategy? Yeah, you can also do bull calls, right? So as I said, when you do bull puts, you have higher probability for success. So for example, you can also do bull calls for Nvidia. That means you can do a debit spread, right? For example, Nvidia on Monday morning, what you can do is, where do you think, where is the support for Nvidia now? Support means this green line. So 202 is the support. You can buy 202 call and you can sell, either you can sell this 206 call, or you can, even if you want much low risk, you can also sell 205 call. And that is a bull call, or that is a debit spread. So when you do a debit spread, you are buying this call, you are also selling a higher, uh, right? Whenever it goes here, so your investment will become less. If you are just buying a 202 call, if it stays choppy, you will lose. But if you buy 202, you also sell a 206. If it goes all the way up, you will make nice profits. And starts dropping, you will make nice profits. So one option is you do bull puts. So even if it stays choppy, if it stays a little bit down, if it goes up, you'll make profits. If you do a bull call or a debit spread, you are buying this call, you are selling this call. Wherever you see the premium zone or you see the order block, sell order block, you sell the calls. You buy the calls here. You sell the calls here. So if it stocks starts moving up, so whether it stays choppy also, because you are also selling a call, this premium will neutralize to some extent. If you just buy 202 call and if price is just staying choppy, you will lose all your premiums. But when you are buying a 202 call, selling a 206 call, your risk is less. So it is up to you, right? One is you just collect the premiums below this. If price stays above this, all that money is yours. So it is much lower risk strategy. So here 85% you will make money. If you do bull calls, 75% you will make money. If you buy calls, 70% you will make money. Like that, it is up to you. So you make more if you buy calls and suddenly Nvidia starts going all the way up to 206, 208, 210, your profits will be much higher. So higher the risk, higher the reward. If you take more risk, you will make more money. If you want to take low risk, right, you are happy with 20%, 30%. Right? You don't need to keep watching the chart, right? Because if you are buying the calls, you have to see whenever it goes here, you have to book the profits. Suddenly you are in a meeting or something, it goes all the way there. Right, immediately first 15-20 minutes it will be very volatile. Suddenly you'll see some big candles. It goes to the top. By the time you come out of the meeting, it already dropped. So if you are a busy professional, you do the bull puts. If you are a full-time trader, you can do bull calls or you can do naked calls. So you have high risk with by buying naked calls. You have medium risk by doing a debit spread or a bull call. You have low risk if you do a bull put spread, if the ticker is a bullish ticker. So it is based on your risk profile, whichever you think. Yeah, there is definitely high possibility for Nvidia to go all the way to 207 on Monday or Tuesday. So definitely, yeah, bull call is also a good strategy here. But again, as I said, if you are a low risk trader, you don't want to keep watching the chart. 95% Nvidia will stay above unless there is any major bad news, which is very chances are very less. But Nvidia will stay above 202 in the entire next week. So you can also do an iron condor. You do a bull put here, you go all the way up here, and you do bear calls here. So by Friday, if Nvidia stays somewhere in between, you are making money with the bull puts, you are making money with the bear calls. So wherever you have the here you have some sellers, here you have some sellers. Go up here, sell the bear calls. Right? You sell 210 call, you buy 215 call. You sell 202 put, you buy some 195, 196 put. You collect some $200-300 here, you collect $200-300 here. So if Nvidia stays somewhere in between, then you are making money on both the sides. Or you can just do the bull puts because we know it is more bullish. The chances for it to drop are very minimal. You just do the bull puts, you make money. So this is one low risk strategy where you don't need to keep watching the charts throughout the day. Just you open the scanner will show you green or red. Whenever you see green, you try to do the bull puts below the support, or you try to do the bull calls above the support, or you can do naked calls above the support. You whenever it is a bearish ticker, you do the bear calls above the resistance. So this is your resistance. So you do bear calls above the resistance. So that's it, right? And then you can focus on your full-time job. So you will have every day, you will have some 10 to 10, 5 to 10 different opportunities, right? Whether you do with futures, you do with stocks, and we are only looking at only top 100 because that is where you have a lot of liquidity, right? There are thousands of stocks, but we are only looking at top 100 S&P and top 100 Nasdaq stocks. If you want to extend, if you do S&P 500 stocks, then you will have 30, 40 opportunities every day. So that is our first strategy. So anyone has any questions in this strategy? So generally for stocks, we do weekly expiry, right? Only for ETFs, if you do it for QQQs, by those things, you have daily expiry. But generally for stocks, your expiry is for, if you take it on Monday, you do it for Friday. If you take it on Tuesday, you do it for Friday, like that. So I hope everyone is clear with the first strategy. Yeah, we use 15 minutes, right? 15 minutes is the best time frame for these. Yeah, whenever you do, we use 15 minutes. So you can do it if you're a stocks buyer, you don't want to take risk with options, you can also do stocks. Your risk is minimal because you know Nvidia is a good stock. If not Monday, Tuesday, it will go all the way up to 10 to $20. So your trend is bullish. As of now, smaller time frames, it is bearish because Friday it dropped. But Monday again, we can see that it is at a support zone now. Already it did a big move. Again, it came down. Now it will do a double bottom and go all the way up to 207, 208. Yeah, you can do 202. You can buy 202 call. You can sell 206 call for Friday. That is one strategy. Or you can sell 202 put and buy 195 put or 196 put and collect some $200, $300 premium. So if stock stays above 202, by coming Friday, then all that money is yours. Or you buy just a 202 or 205 call. If you buy 205 call, your premiums will be less. And if it goes all the way to 208 or something, your 205 call will make 50, 60% or more. Like that, you can use different strategies. So all these are custom scanners. So you won't see these scanners unless you get the access. But I hope everyone is clear with the strategy. Right? This is number one strategy where you do naked calls or bull puts or bear calls or naked puts or buy the stocks or short the stocks using the scanners QQQ, QQQ1, 2, SPY 1, SPY 2, SPY 3, like that. So that you are mainly looking at the top stocks of Nasdaq, top stocks of S&P, because always they will have good volume, right? If you look some random stocks, you may not have good bid and ask, or you may not have proper volume. You are you may not be able to make nice profits. But when you trade with top 100 stocks of SPY and QQQ, you have higher chance of success. So that is our first strategy. If you want to do stocks, if you want to do options, if you want to do futures, you use these type of scanners. Now let us go to the second strategy, which is, well, let me delete all these indicators. So I hope everyone is clear with the QQQ or SPY. So the second type of strategy is we use something called stocks level manager. So SLM stands for stocks level manager, where we can also paste some intraday levels. So every day based on open interest, based on gamma and gamma values, we create the intraday levels. So again, for this strategy, what you do is whenever you see a swing sell, right? One is if you are a day trader, scalper, you can also use buy signals, sell signals. You can write price came all the way to the bottom. You got a buy, right? This is like a support zone. This is like a resistance zone. So just like this is like your discount zone, this is like your premium zone. So whenever you get a discount zone, you buy the stocks or you buy the calls. You do the bull puts. Whenever price goes all the way to the resistance or premium zone. So you see it went all the way to R7, right? From magnetic level, that means this is the base price. From base price, it went all the way nearly to the top. Then it started dropping. So that means big companies always want to take it to the up. Retail traders, we think like, oh, it is very bullish, we buy at the top, then big companies will bring it down. So generally, R8 is like close to high of the day. They took it nearly close to that and then brought it all the way down. So whenever you get a swing sell signal, you can buy the puts, you can do the bear calls, you can short the stock. Whenever you get a swing buy, right? SB stands for swing buy. Whenever you get a swing buy, you can either do bull puts or you can do bull calls. Now there is a high possibility again stock will it did a double bottom and it may go all the way to minimum 206, 208 on Monday. So like that, whichever stock you want to do, Tesla. So you can create an alert on swing buy and swing sell. You can go here, you can select the indicator, and you can say, okay, whenever I get a swing reversal, right? These are like normal buy, normal sell, strong buy, strong sell. That means these are mainly for scalpers. If you are full-time trader, these are good. But if you are more of a part-time trader, you are doing your full-time job, but you also want to take opportunity, create a plan B, start learning, then you mainly focus on the swings, right? You don't try to buy somewhere here, buy somewhere in between. If you are If whenever if you see a swing buy signal, you take the trade because once you get a swing buy, next 1 hour, 1.5 hour, it will keep going up. Or if you get a swing sell signal, maybe next 1 hour it will drop. So that is a swing opportunity, right? It is not a quick day trade. You can hold the trade for right? Maybe 3 hours, 4 hours, or maybe for one day. You have high possibility. So you have a low risk when you do a swing buy or swing sell compared to just buying and trying to sell here, right? Sometimes you, with a FOMO, you take a trade, and because it is overall bullish, we don't look at the higher time frame trend. Suddenly you take sell, suddenly it starts bouncing up. You get panic, you close it, again it starts dropping. So that's where if you are in a swing buy, you take the trade, or you take a bull put, or you buy the stocks, or you buy the naked calls. Or if you get a swing sell, you do the bear call spread, or you do the bear puts, or you do the naked puts, and then you can again make nice profits. So like that, with SLM, mainly we can use it for SPX, PI, QQQ, NVIDIA, NDX, Tesla, Amazon, Google, Microsoft. So here you will also get the levels. So it went all the way to resistance 8. That means there is a high chance for a drop. Or at the morning time, right, on Friday, you are close to the magnetic area or baseline area. Or when Friday market opened, your price started going above the baseline. That means it gives you confidence price will go up. Or when market opened on Friday, you are already at the top. You are already at R7 or R8. Then there is a high possibility it will drop. So by looking at the levels, you can anticipate that if you are somewhere just above magnetic level, you have more potential to go up. But you are already somewhere at R7, R8, it can drop. Or you are somewhere at S1, right? This is your base level. If you are at S1 and you see price dropping, then there is a high possibility it will be more bearish. You are already somewhere at S8 when market opened. Then there is a high possibility it will bounce back. So the levels will help you to identify whether the stock will be bullish or stock will be bearish. All right. Again, if you don't want to think too much, just buy at swing buy, sell at swing sell. Right. You can use it for any stocks, but when you do with some of the major stocks, right, your Tamanna or major SPX, SPY, QQQ, you will also get the levels that will give you additional confidence, additional confidence. But if you trade with normal stocks, right, for example, if you want to trade NET, then it won't show you the levels, but it will tell you where the swing buy is, swing sell is. So here you got a swing buy. That means you can do the bull puts below that price. Now you got a swing sell. Maybe Monday we may see a drop until 245 on net. So you can do bear calls, 265, 270 bear calls on uh, on net. Now it is around 256. For next Friday expiry, if you do 255, 260 bear calls, there might be a high possibility because it made such a big move. We'll see a retracement. So like that, you can use SLM for your stocks to do bull puts, bear calls, naked calls in the same way. So generally we can use 5 minutes or 15 minutes for stocks or for your personal account trading. The same way, just like SLM, you have FLM, which is for futures. So here it went all the way, touched the swing cell, then there was a huge drop. Then again it touched the swing buy, it went all the way up. So all you need to do is wait for the swing sell signal or wait for the swing buy signal. If you are trading prop firms, whenever you get a swing buy, you just buy 2 micros. Whenever you get a, if you are right, if you are a full-time professional, you cannot. keep watching the charts. Just you do two micros here, or you do two micros long here. You do two micros short here. Even with two MNQ, you make $300-400, either in personal account or prop account. Here with two MNQ long, you will make $200-300. So all you need to do is create an alert on the swing sell, swing buy, go to FLM, uh, and then you select swing reversal. If you want to do one by one, you can do swing buy and swing sell. Or you want for combo, you can do swing reversal. So whether it goes, you get a swing buy or swing sell, you will get an alert. Then you can go to the chart and you can see. For example, let us see some alerts for cryptos, right? Because for futures market, it is closed, but so SLM you will mainly use for stocks. FLM you will mainly use for futures. If you use RLM, which is a combo for stocks and futures and also cryptos. So now you got a swing buy for this WIF USD. So in next 1 hour, you may see it going all the way to the top, right? Next 1 to 2 hours. The volume will be little less, but we'll see, right? It went up, we'll do a small drop, again goes up, again do a small drop, goes up. So like that, if you get a swing sell signal, it came all the way down. From the trend line resistance, it came all the way to the bottom. Now again it is going up. So like that, you can set alerts on the swing buy, swing sell, and then whenever you get a swing buy, you go long. Right now you got a swing buy. There is a high possibility this will go all the way to the top. So again, you can do 5 minutes if you are doing in the prop firms. If you are doing in personal account, you can do in 15 minutes because 15 minutes always has much higher quality signals compared to 5. If you are doing in personal, use 15 minutes. If you are doing in prop accounts, use 5 minutes and on the create alert on the swing sell or swing buy. The X symbol means it is telling that it will reverse now. That is like a swing low point. It is telling that yeah, price dropped so much. Now it will minimum your target is 0.53. If it breaks 0.53, it will go all the way to 0.54. So this is the lowest point. This is the medium point. This is the highest point. For example, SPX. It went all the way to the top. Right? You got a swing sell. Then there was a big drop. Then you got a swing buy. Then it went all the way to the top. So even if you want to do iron flies also, it is mentioning that okay, if it goes to this sell zone and starts dropping, around 68.44 is the average price. It may drop. So it dropped near to 68.40. So your low price is 68.14 is your strong support. 68.74 is your strong resistance. 68.44 is the medium price. So if you want to do iron flies in last 1 hour, you can see what is the medium price. You use that as your iron fly. So again, right, you want to use the same indicator for your SPX. Whenever you get a swing buy, you do the bull puts, right? You don't even need to look at the chart. Whenever you get a swing sell, you do the bear calls. Just to go a little bit up, do the bear calls. You don't even need to look at the chart, right? You can just let the trade expire. If you get a swing buy, you do bull puts, let the trade expire. Or you can do naked calls if you're a high risk trader, or you can do bull calls. You can do bear puts. You can do bear calls. So based on your risk profile, you can choose whichever strategy you feel is appropriate for you. So if you use RLM, you can use it for stocks, futures, cryptos, everything. But it is mainly for the premium members. If you have more than 6 months, you can get RLM. Otherwise, you have to get SLM, which is mainly for stocks on or indices or ETFs. Or if you try to do SPX with FLM, it will throw an error. Says that okay, RC futures level manager is only for futures and commodities. SPX is not a futures, so you cannot do it. So you can only do either ES or NQ or NKDG, only futures with the FLM. So we can also use another indicator called T5, uh, that will help us to give you the confluence. So, for example, whenever you get this swing buy, here T5 also came all the way to the bottom, started moving up. So that is the best opportunity. You got a swing buy, T5 also came to the bottom, started going up. Or you got a swing sell, T5 also started dropping. That is the best opportunity. You don't need to think much. You can do 50 delta bear calls, and you don't even need to look at the chart, right? All you are doing is just you wait for the signal. You can keep an alert on your phone or your email. Whenever you receive it, you just take a trade. You see that okay, this is sell, this is sell. Okay, both are matching. You take a bear call. This is buy, this is buy. You take a bull put. That's it. So we are not dealing with the small buy and sells. Sometimes, right, we get panic with those things. So better you just to focus on the swing buy, swing sell. Whenever you get a swing sell, you do the bear calls. Whenever you get a swing buy, you do the bull puts, or you do the bull calls, or you do the naked calls. Like that, you can use it for SPX trading, you can use it for stocks trading, you can use it for options, you can use RLM, right? If it is FLM, only for futures. If it is SLM, only for stocks. If you try to use SLM, it will throw an error saying like this indicator is restricted to stocks, indices, or ETFs. So only you can use it on stocks. But if you have annual subscription, if you have RLM, that is you can use it for anything. Any stocks, options, futures, cryptos, forex, whatever it is, you can use it. So you just wait for swing buy or swing sell. Whenever you receive the notification, you take the trades. So that is your strategy two. First one is the QQQ spy scanners, where you do bull puts or bear calls. The second one is you use FLM, SLM, or RLM along with T5 confidence, where you can confidently take the bull puts or bear calls, and you can hold without any worry. You don't even need to look at the charts. All you do is open the trade and you can let it expire. If you open a bull put, so tomorrow morning, let us say you get a bull put, then you just take a trade. It may go all the way to the top. It may. So that is your strategy two. Yeah, again, you don't use this. If there is some earnings, then don't use it because always your fundamental will always have more priority. So, if, for example, if you have some earnings, let us say which stock we have, let us say we have AMD. Let us say you may get some bear calls for AMD. That you got a swing by now. It may go all the way to 258. If the earnings are somewhere next Tuesday or something, don't open a bear call because with the earnings, there might be high possibility AMD can go further high. So if there is any news event, better you don't take the trades, right? Because news can always, right? All these your indicators are more of technical analysis based on the historical data, based on support, resistance levels, pivot levels, gamma levels. All these indicators will work. But if if there is earnings or if there is sudden bad news or right? Trump says again, China, he will put 100%, 200% tariffs. Something there is always a risk. That's why you always go with a smaller size so that if there is no black swan event, there is no major bad news or anything, then we will make profits. So that is your strategy too, right? The first one is QQQ spy scanners. The second one is we use FLM, RLM, or SLM along with T5 confluence. Now let's go to the third one, which is again with the SPX. So within SPX, one is you can use RLM and you can take the trades, or you can use right the daily income trade. You if you don't want to focus on too many tickers because stocks you don't know when they have earnings, or you may suddenly there might be some manipulation with the stocks. You don't want to look at so many tickers, then you can just look at SPX every day because that is the ticker with the highest volume across all stocks, ETFs. SPX will have the highest volume. So you can just use SPX and you can take the trades. Whenever you get swing buy, do the bull puts. Whenever you get a swing sell, do the bear calls. That is the first strategy. Or the second strategy is so every day morning, your SPX indicator, trade spread indicator, will give you what is the bias for the market. It looks at what is the pre-market volume, all those things. It will tell, okay, market bias is bullish. But if there is already a huge gap up, right, compared to Thursday, Friday it opened very big, nearly 40, 50 points up. Only in these scenarios, so if market bias is bullish, consider bull puts at bottom of the band if overnight gap is below 0.5%, right? 0.5% means 30 points approximately for SPX, 30 to 35 points. If it is below, right, generally SPX may move 5 points up, 10 points up in the overnight, right? Or 5 points down, 10 points down. But there are very few days where there might be a big gap up, right? Market closed somewhere on Thursday, it closed at 68.20. On Friday, it opened somewhere around 68.74, right? Nearly 50, 60 points up. At that point of time, if overnight gap is over 0.5%, approximately 30 points on SPX, follow the signal on the ES ticker. So now instead of using SPX, you go and check ES because SPX there is no overnight volume. But for ES, you also have overnight volume. So now ES is telling that because it looks at pre-market, post-market, entire midnight volume, everything. ES is telling that oh, market already moved so much, there is a possibility for a drop. If the gap up is very less, minimal, you can just focus on the SPX signal, right? You just go to SPX, and if it says market bias is bullish, if the gap up is very less, you can just do the bull puts. Whenever price comes to the bottom, you do bull puts. Again, you see price at the bottom, you do bull puts. But if the market is already gapped up so much, then instead of using SPX sticker, you go to ES sticker and it is saying market bias is bearish. That means immediately you can do a 20 delta. That means you collect $100 and 95% of the time price will stay below that at the end of the day. You don't even need to look at the chart again. Once you take the trade, you can just let it expire. So whenever the gap ups or gap downs are huge, you go to ES chart and watch what is the signal. If the gap up or gap down is only 5 points, 10 points, 15 points, or sometimes it whenever it closes, it opens at the same time, at the same price. Then you don't even need to go to ES. Just you will stay with the SPX itself. Then you follow. If it says buy a bullish, then you just go a little bit below, do a 20 delta bull put, you let the trade expire. So you don't even need to keep watching the chart. throughout the day. So that is the next strategy for SPX, where you wait until 9 o'clock central. Whenever you receive a signal, you see whether the gap up is huge or not. If the gap up is not huge, you just look at the message, you follow it. Or if the gap up is huge or gap down is huge, you go to ES ticker and follow the ES rather than SPX. So that is your SPX strategy. So now we discussed about three types of strategies. One is using SPY QQQ scanners. You do bull puts, bear calls based on the discount zone, premium zone. The second one is use FLM, SLM, or RLM. Create alerts on the swing buy, swing sell, whether for SPX or for any stocks. Whenever you receive swing buy, you can do bull puts or bull calls or naked calls. If you receive swing sell, you can do bear calls or you can do bear puts or you can do naked puts. The third strategy is using SPX CS indicator. So you are using a system based, right? We should just to follow the system, right? Sometimes, right? Even last week, I missed that if there is a huge gap up or gap down, we took some bullish trades, right? Even though the gap up was huge, we should have avoided the bullish trades because already it made 50, 60 points up, right? Generally, the market makers want to manipulate the retail traders, right? They try to take it all the way up, but then we feel that our market is so bullish. We try to go long, suddenly they bring the market so much down. Or they bring market all the way down at the market open. Immediately they when we think market is very bearish, they take it all the way up. So that's where I updated the message so that we all remember by looking this that okay, if there is a huge gap up or gap down, you don't follow the signal but go to ES ticker and watch the signal. The same way if you want to do NDX, same thing, right? If it is market bias is bullish, then you go to NQ chart. NQ is telling that it will drop. So then you can do QQQ bear calls, you can do NQ bear calls, you can do options on NQ, you can do NQ puts like that. So that is the next strategy, right? So one is SPX, how to use the indicators for SPX daily income. One is how to use your QQQ spy scanners for the weekly income. Then how to use your uh, SLM, RLM, FLM for your day trades or for swing trades. Then the last one is earnings, right? Earning strategy where we use generally daily time frame. For example, last week we took WDC, right? Price was somewhere touches the support. It is in a bullish direction. WDC moved nearly 15%. We took Meta, right? Meta went all the way to the top, right? Before the earnings, it was at the top of the resistance. Then Meta dropped huge. So, what are the earnings in the next week? Tomorrow. Okay, we have PLTR, HIMS, Uber. Okay, let us look at PLTR. PLTR is still bullish as of now. HIMS came all the way to the bottom. So, what do you think, HIMS? right? What can happen to him for earnings? I mean, there is a high possibility for him to go up, right? If you want, you can also just go to price pulse. You can look for the confluence. So here there are a lot of sellers around $64. But if you see, there are nearly 14 million buyers here at 41, 42. There is a high possibility for stock to touch this and then it will bounce back. So if you do bull puts below this, there is a high possibility you will make money, right? If we do some sell 40 and buy 35 puts, we can make nice profits. Or you buy some 40 call, right? Immediately after earnings, it may drop and then there can be a big bounce. So there is a very high possibility because price went all the way to the top. So before previous earning, it was at the top. There was a huge drop. Now there is a high possibility. Price came all the way to the support, below the support line. So it may tomorrow there might be little more drop and then it may go to 40, 41, and then once they release the earnings, we may see a nice bounce on HIMS. The same way, let's go to Uber is nearly close to the resistance. There is a high possibility for a drop on Uber. So if you see here, Uber, there are a lot of big companies want to sell off 22.76 million sell orders are. So if you do bear calls somewhere here, there is a high possibility to make money. So like that, 8 out of 10 times, 9 out of 10 times, we can make profits using this strategy. Right? That is one day before the earnings. If you want to take the trades, this is the best strategy. You use T55, you use price pulse. That confluence will help you to do bear calls, or you can also buy a put. You buy 100 put for Uber. If there is a big drop, it may come all the way to $90 where the buyers are. If it breaks this, it will come all the way to 82. So again, because your premiums will be very expensive before earnings, if you want to buy naked call, naked put, if you do bear calls, you do 100, you sell 100 call, buy 105 call. Your risk is minimal, right? Or for HIMS, you sell 40 put, buy 35 put, collect premiums. HIMS stays above 40, then all that money is yours. So like that, that is one more strategy when you want to trade one day before earnings. Just all you need is 5-10 minutes before the earnings, 15 minutes before the earnings. You come here, watch, and then you can take the trades. 8 out of 10 times you will make profits. Then so we took for Sophie also. Sophie also was close to the resistance, started dropping. We made nice profits with Sophie. So then there is one more strategy. If you want to do, right, you don't want to just to take one day before, you want to do 2-3 weeks before. Right, generally at around earnings, your implied volatility will be very huge. Your premiums will be very, very expensive. 2-3 weeks before, your premiums will be very cheap. So, for example, if you have some earnings for, let us say, let us look at some stocks which are reporting after. Okay, Disney. Disney is reporting after 10 days. So let us say if I go here and I select Disney. Disney, it is telling it is just a three-star, right? So you watch out for any stocks which are reporting after 3 4 weeks. Let me go to finance. Okay, we have NXPI on October 27th. Oh, sorry. We need to see somewhere around November 24th. Okay, we have Zoom. Okay, if you see Zoom, it is nearly five-star, right? This is a three-star. So if you do some bull puts for Zoom for next month, right, 11/21 expiring, you have a high possibility that Zoom will go up. You will make nice profits with the bull puts. So you see like which stocks are reporting after 3 4 weeks. You list all those stocks, whichever you see five-star, six-star, they are the best ones. You can either buy naked calls or you do bull puts because by the time before the earnings, their premiums will become very expensive. So you can make nice profits. So you don't need to wait until earnings close. You close one day before the earnings. Now your premiums are cheap and it is very good ticker, very bullish ticker. It has nearly out of six, it got 5 points. So you don't take for Disney, but you take for Zoom. You will make nice profits within next 2 3 weeks. So all you do is just 5 minutes, open a trade. You don't even need to keep looking the chart. One day before the earnings, so earnings for Zoom is on November 21st. You close the trade around November 20th or November 18th, 19th. You will make nice profits. So that is one more strategy where 3 4 weeks before, if you want to take earning trades, we do this pre-earning scanner. One day before you want to do, then you use this T55 along with price pulse that will help us to determine whether to go for bull puts or bear calls or naked calls, naked puts, like that. So, like that. So, all right, you don't need to keep looking at the charts for hours together, days together. All you need is 5 10 minutes before earnings or 3 4 weeks before earnings, and you take a trade. Right? How much time it took for you? So you just open a link in Yahoo Finance, you will know which stocks are reporting earnings after 3 4 weeks. You just go there, you put those, you just click on edit, you select that symbol, then it will tell you whether it's a five-star or six-star, if it is or three-star. Then if it is five-star, six-star, you do the bull puts or you do naked calls, you do bull calls before 3 4 weeks, and just one day, 2 days before the earnings, you just close the trades with profits. So that is one strategy. Or you go here, 10:50, right? Tomorrow, if Zoom is reporting earnings, you go and see whether it is above the resistance or below the support. And also, you see the confluence with price pulse. The price pulse also telling that, oh, this Zoom is close to resistance, it may drop. Then you you take the bear calls. Zoom is at the big buy order block. You do the bull call, bull puts, like that. So that is one more strategy for earnings. Again, post earnings, again you can use RLM, right? For example, Amazon reported good earnings. Now you will only do that. You will go back to 5 minutes time frame. Now this came all the way to the bottom. So Amazon reported good earnings, but it went so much high. So there will be a pullback. Now you got a swing buy. So now whenever you get a swing buy, you do the bull puts on Amazon. Next week again we will see a bounce on Amazon or Meta. It reported negative bad earnings. You wait for the swing sell. Right? There was a big drop whenever you receive a swing sell. Right? Because it dropped so much, it will go little bit up, and then you because your earnings are bad, it dropped so much, it will do a small pullback. Right? Again, resistance is at 655. Tomorrow you may get a swing sell here. So if the earnings are good, you watch for the swing buy signals. If earnings are bad, you watch for the swing sell signals. Don't try to buy at a FOMO, right? Generally, what happens is, right, especially as retail traders, we trade with emotions. We don't have a system, we don't have a rule-based approach. You just go based on the news, right? You see that oh, Amazon moved so much after earnings. Next day morning, you will buy at the top. You will buy calls at the top. Big companies will bring it all the way down. So that's where, if you follow a system, if you follow a rule-based approach, will be a lot more successful. So if the earnings are good on the next 2 3 days, wait for the swing buy signals. If the earnings are bad, wait for the swing sell signals. So like that, you can trade pre-earnings 3 4 weeks before how to trade, 1 day before how to trade, 1 day after or 2 days after how to trade. You can use your SLM or RLM, price pulse, pre-earning scanner for earnings. So if you are someone who likes to do earnings, you just focus, right? All you need is 5 10 minutes every day to trade earnings. Or you are someone who want to trade prop firms. Then you wait for the swing buy, swing sell on RLM or FLM. Whenever you get a swing buy on ES or NQ or GC or silver, you just take the 2 micros. Next 1 2 hours, it will keep going up. So even though it goes little bit down, you don't need to worry because you got a swing buy. It may do a double bottom and again go all the way up. So your risk is minimal. You won't blow your accounts, right? If you're a full-time trader, if you can focus completely, then you can also do minis. But if you are a busy professional, you cannot control your emotions. You see a red candle, you get panic. Then you just take 2 micros and let it run until you get a swing sell signal or until it goes all the way to the top, right? Amazon may go all the way to this sell zone, right? This resistance 247, 248. Until that time, you can keep holding the trade. So once again, I want to remind you, right? Let's go back where we started, right? Job market is very, very bad. Immigration reforms are getting very, very bad. EADs or everything is getting impacted. H1s are getting impacted. So it is very, very important for everyone to have, right? Not just technology, non-technology jobs, because if AI can do technology jobs, it can even, right? You can see that Elon Musk is coming up with so many robots to do so many things, right? Amazon is replacing all the manual stuff for the deliveries, all those things also with robots. So it is not just IT jobs which are getting replaced, even lot of non-IT jobs, admin jobs, HR jobs, everything will get replaced by AI. So it is very, very important for us to have a plan B. And to have a plan B, always have a simple rule-based approach, right? What do you mean by rule-based approach? Okay, wait until 9 a.m. Watch for the market bias. If there is a big gap up or big gap down, don't look at the SPX signal. Go to ES signal and look at the direction. If there is not much gap up, then just use that. Do a 20 delta bull put. So that is a rule-based approach, right? That is okay. If this happens, do this. This happens, okay. If you get a swing buy, go and do bull puts. If you get a swing sell, go and do bear calls. If it is a discount zone, if it is a bullish ticker, go to the support and do the bull puts. If it is a bearish ticker, if it is at a premium zone, go and do the bear calls. So that is called as a simple rule-based approach. If it is a future sticker, it is a bullish sticker at a discount zone, go long. If it is a bearish sticker at a premium zone, go short. So that's what we use a strategy just to follow the strategy, right? After first 1 week, you might, right? It might feel little difficult to stay with the disciplined approach, but as you, because you saw so many success stories, right? Ankit, or you saw Arpit, just to by trading one micro, right? All he's doing is he's waiting for that sell zone or buy zone. Whenever it goes to the sell zone, right? Just like that swing buy, swing sell. He was waiting for the swing buy zone. He takes one micro here. When it goes all the way to the swing sell, he takes one short micro, one long micro. He made nearly 8,000 with futures, 8,000 with SPX in just till October month. 16,000, right? That is much better than your IT just with one micro or with one SPX contract. He's all he's doing is when it comes to the buy zone, he is doing bull puts for SPX. When it goes to sell zone, he is doing bear calls for SPX. When it comes to a swing buy zone or swing zone, swing buy zone, he is taking a long on micro. When it goes all the way to the top, he is taking one shot on the micro. Just with one micro, where you need 1,000, $2,000, he made nearly $16,000 just within October month. Just with one micro, right? If he once he gets confidence, he increases to two micros. That 15,000, 16,000, he can do 32,000, right? So that's what, if you follow the rule based approach, understand and try to maintain the discipline, there is a nice success. But if we trade with emotions, that's where, yeah, we will face losses, or we'll face issues, or uh, but yeah, if we go with a simple rule based approach, we have a huge success. And there are a lot more like Ankit, Arpit, and yeah, you saw many other success stories. Uh, but yeah, all we need to do is initially it takes some time. Definitely for everyone, it takes a little bit time because everything is new, right? Whenever you started your IT job, also on day one, you are not able to do all the programming, whatever you are doing now. You are not able to do all the analysis, all the meetings, client communications, right? Initially, you also had lot of issues. So you took time, so where you are successful now. But companies, for them, all it matters is numbers. They want to, if they are spending a lot of money on AI, they have to reduce the manual force, right? We saw that AWS outage because they reduced manual force. There was a huge outage on AWS, which created a lot of it. So, but yeah, the companies will try to reduce the manual force so that they can spend more investments on AI. So before it impacts your, don't wait until the surprise. Don't wait until it to happen, and then you don't try to start, because then you will be in a much bad scenario, or right, you will be much right. When it is a plan B, pressure will be less on you. But when that becomes your primary source, you will have a lot more pressure to make income. You will make more mistakes. When that is only a plan B, then minimum you will try to follow the rules, and you will become perfect in the meantime. But if you wait until everything happens, then you, instead of proactive, you are taking reactive, then the chances are high for us, right? Because when you have a job, you can every day you can spend 1 hour, 2 hours, end of the day, or some whenever you get some time. You see like, oh, which strategy looks good? Is QQQ spy strategy, right? Every day morning, I open the scanners, I see which ones are discount, which one are premium. I open the credit spreads or debit spreads or bull puts, bull calls. Okay, that is good. Or I use SLM, RLM, FLM. I do swing buy, swing sell, or I take a micros, I take a long here, I take a short here. That looks good. Or I use SPX indicator. Whenever I get 9 o'clock, I see what is the thing. Based on that, I take a trade and I let it expire, right? Or I take earnings trades. Whenever 5-10 minutes before the earnings, I look T55, I look the price pulse, I take the, or 3-4 weeks before, I look at the pre-earning scanner, I see that which ones are 5 star, 6 star, I take the trades, and I don't need to, you don't need to keep watching the charts for next 2-3 weeks. So you decide which one suits your style, your work schedule, right? Because if you have to do SPX, multiple bull puts, multiple bear calls, your job may not support you. You may exactly take one losing trade and miss all the other trades which are making profits, right? Friday we made nearly profits on every trade. We did bull puts, we did bear calls. So that's why you have to see which strategy is good for you, applies for you, and then you follow that and become perfect in that. So if you are taking SPX every day, you will become perfect with SPX. You know what market makers will do initially. They will take it up. They will bring it right to Friday. I mentioned that they will bring it all the way to right magnetic zone or S1. So if you see that even in the morning itself, I mentioned that they will bring it all the way down and they take it all the way up again. Exactly, they did the same thing. Right, morning there was a huge gap up. They brought it all the way down to exactly to the, if you see the levels, so there was a huge gap up. Then they brought it all the way, so all the way down to S1. Right, if it breaks S1, that means sellers will have full control. The exactly overall bias was bullish. They brought it all the way till S1. If it breaks, then we can enter shorts. So then they take it all the way up again to the top. Wherever it started, they took it nearly all the way to the top. Last 15-20 minutes, they brought it down. So like that, once you trade some tickers consistently, then you will understand that okay, what market makers may do. Tomorrow again, they will take it up, and then again we may see a drop Monday morning. Right, we may see a gap up with ES and Q. So tomorrow evening, ES and NQ will be bullish. So if you see ES, right, ES came all the way to the bottom. Came all the way to the bottom. Now ES will Sunday evening it will start moving up. We may see a pushback. We may see it going all the way again to this sell zone or little bit above, touch the resistance, and then again we may see a drop. Right? It may touch this previous day high and then drop later. So like that, once you start trading any ticker consistently, if you use any strategy consistently, you will become perfect in that strategy. So you just take some time to learn, understand, practice. So you will become perfect in one strategy. Then you know that okay, whenever I get a swing buy, I'll do the bull puts. Whenever I get swing sell, I'll do the bear calls. Or whenever I see that uh, there is a huge gap up, then I see that there is a high possibility for a drop. Or whenever there is a huge gap down, then there is a high possibility price will go up. So like that, you'll understand what market makers, big companies will do. When you follow one ticker for 1 2 weeks, 3 weeks, 4 weeks, you will become more and more expert in trading that ticker. So it is up to you. So I explained you four different types of strategy. One is earning strategy, pre-earnings, one day before earnings, post earnings. I explained you with the SPX. One is you can use SLM, RLM. You do bull puts when swing buy. You do bear calls at swing sell. Right. The other one is use SPX CS indicator. Watch out for the bias for the day. If the market, if the gap up is so much or gap down is so much, you look at the ES chart and take the direction based on that. Or you can basically reverse. If the gap up is huge, then basically because this indicator is only because SPX doesn't trade in the overnight. So SPX only starts at 8:30, close at 3. So it mainly looks at first 30 minutes volume. Based on that, it is telling bias is bullish. But if already there is a huge gap up, there is a high possibility for a drop. So that's where you are right. You can just take the reverse of this, or you just go to ES. That will tell you. So that is your strategy two. So SPX daily income is your strategy two. Earnings is your strategy one. QQQ SPY or FFF is your strategy three. Or RLM, SLM, FLM, that is your strategy four. Whichever you think is good for you, you can follow it, and you can become consistently profitable if you use that rule based approach. So you have to trade as if we are robots. So you just write down, you have a printout, and then you just follow that. Okay, if this happens, I have to do this. If this happens, I have to do this. That's it. Don't, right? We should not use our own emotions or our own decisions. Rather than we just follow the system, right? Because if we follow the system, we'll have more success. If we try to use our intelligence, we try to add our things, then yeah, we'll complicate it. We'll make it more complex. Our results will not be consistent. One micro means you are, instead of taking ES, you take one MES. Yeah, yeah. You just take one MES or one MNQ, one MGC, like that, right? Let us say, for example, gold. So gold came all the way to the support, right? It touches the resistance, came all the way to the bottom, touches the support. So if it breaks it, it may go touch the resistance. So if it goes to 40, 49, again we may see a drop. So you can take one MGC here. When it came to the bottom, you take one MGC. Or you just look at this. Okay, ZB bearish. Okay, NQ, the trend is bearish. It is at a discount. So there might be some pullback. When something is bearish and it is a discount, it will not go all the way to the top. It will only go till somewhere midpoint, and again it will drop. But if something is bullish and if it is a discount, it will go all the way to the top or go little bit above the top and then drop to the midpoint, again go up, like that. So that's where we look at the bullish stickers. If it is bearish sticker, it will come all the way to the bottom and then go little bit up, again go all the way to the bottom, like that. If it is a bullish sticker, from bottom it goes to the top, comes somewhere to the middle, goes again somewhere high. So creating higher highs, higher lows, higher highs, higher lows. So that's why you ignore the others which are choppy. You just take the green or red ones which are bullish or bearish. So yeah, that's it everyone. So you can watch. I'll share the recording. You can watch it once or twice. And yeah, so members already who has indicators. We have more than 300 plus members who has indicators. So I explained all these strategies one more time so that now you know which one, you decide which one is good for you, and then you can select which indicators are good, and then if you fill the Google form, you will get the indicators based on your selection, right? So it is very important, right? If you are a busy professional, if you try to do scalping, it may not work for you. You will definitely, you will make mistakes, you will lose more money. If you are a full-time trader, if you do only swing trades, you are unnecessarily losing lot of, right? Because with swing trades, you have low risk and low returns, right? You have to wait for 3, 4 weeks to make 20%, 30%, or 40%. So that's why it is very important for you to decide whether you are a swing trader, scalper, day trader, or a long-term trader. Based on that, you use the strategies. right? So yeah, that's it, everyone. And yeah, decide which ones you want. So once you, so you can do six to seven trades every day for stocks or options. Even though there might be 10, 15 opportunities, don't take too many opportunities. Suddenly, if there is any news or something. So if anyone want to subscribe to any of the indicators, they can go to ninja underscore apex underscore bot. So that is the Telegram bot. If you go there, you will see all different plans. Whether so you can select a three indicator plan or five indicator, right? For example, you want to do only earnings, then three earnings are good enough. Or you want to do earnings and prop firms, five indicators. Or you want to do only SPX, then maybe three indicators. Or you want to do stocks, options, futures, five indicator plan. Like that, you can once you select the plan, then you have to fill a Google form which will have all these indicators. Then you can select it. Okay, I want these five or these three. Then you will get the access to those indicators. And then live session, I'll also explain you in the live sessions on how to take the trades for a few days so that you will become independent. Now you understand, right? Already most of you are answering everything correctly. That okay, if this is like this, then I'll take this. So once you become independent, then you don't need to wait for my alerts. You can, based on your account size, you can take micros, you can take minis, you can take uh, stocks, you can buy options, right? So everyone's risk profile is different, everyone's account size is different. If I take some iron fly, I may be taking high risk, but your account size may not be right sufficient to take iron fly. For you, maybe bull puts or bear calls at swing buy, swing sell might be good option, right? So you have to see if we are risking $1,000 on iron condor or iron fly, we may make 2,000 or we may lose 1,000. That is okay for me if I lose in one trade because in another two, three trades, I'll make that profit. But for you, if you have a small account, that $1,000 might be a big risk. So then you have to see that, okay, for me, iron condor strategy may not be good. Iron fly may not be good. I will try to, right? Okay, I'll take only 50 delta. That means if I make 250 or I lose 250. If I take bull puts, if there is no major news on the day, I'll make 250 at the end of the day. If suddenly Trump tweets something, suddenly market goes down, AWS goes down, something happens, I lose 250. Otherwise, I make 250 on 8 or 9 out of 10 days. So that's how you need to see which is good for you. And then, so micro means basically one tenth of a mini. So if you take ES, you make $50 for every 1 point up or 1 point down. If you take a long, if it goes 1 point, you make $50. If you take a short, if it goes 1 point down, you make $50. But if you take MES, that means that is a micro ES, your risk is $5. Your risk and reward is $5. Either you make five or you lose five for every 1 point drop. So just like SPX, you have XSP. XSP is like one tenth of SPX, or SPY is also like one tenth of SPX. So if you are a small account holder, you can do a XSP or SPY, which are one tenth. If you are a small account holder, instead of doing NQ, ES, GC, you do MNQ, MES, MGC. So minimum you will not blow your prop firm accounts. You will until you learn. You slowly take the trades. And once you gain confidence, you can you can take minis because initially everybody will make mistakes because of emotions, because of human errors, all those things. But once you become confident, you will be much more successful. Yeah. So that's it, everyone. If you have anything, yeah, please. We'll have another setup session in the evening. We'll help in the evening with any setup if any new members or any old members want to change the indicators in the setup session at 6 p.m. Central. We'll do the setup session. Yeah, Venkat will do at 6 p.m. 6 p.m. Central. We'll have the setup session where I'll help you one on one with all the indicators. You can decide on the indicators by that time. Yeah. Yeah. Bye everyone. Have a nice rest of the day. But yeah, whether trading or whatever it is, have a plan B because yeah, IT market is getting more and more tough. Immigration also is getting more and more tough. So better have something as a backup plan because everyone will have a lot of commitments, your home EMIs, kids education, so many things. So it's better you have something in place before any surprises. Yeah. Bye everyone. All the best and talk to you in the later sessions.